They say the market rewards courage, but it punishes arrogance. And the line between the two is so thin that a man often doesn't see it until he's already crossed. I didn't build my fortune by being right once. I built it by being right, and then pressing that rightness to the limit of logic and discipline. I called it pyramiding, the art of building profits upon profits, not with hope, but with proof. When I began, I traded like every other ambitious young man. I chased every rise, panicked at every dip, and thought the secret to wealth was more trades, more action, more risk. I was wrong. The real secret is waiting for proof. The big money isn't made in the buying or the selling. It's made in the sitting. Not sitting idly, but sitting with purpose, with control, knowing when to increase your exposure and when to leave it untouched. That's where my profit pyramid came from. Every great move I ever caught, the panic of 1907, the 1929 crash, they weren't accidents. They were pyramids built on proof. In my early days, I would buy a stock and pray it went my way. And when it did, I'd feel invincible. But that's the moment most traders lose. They rush to double down, blind to the difference between a move that's beginning and one that's ending. It took me years and fortunes lost to learn that the market itself tells you when to pyramid. You don't pyramid because you want to. You pyramid because the market confirms your original judgment. Every new position must prove itself by earning the right to exist. Each addition to a trade should only be made after the previous one is already profitable and confirmed. That's how the pyramid stands tall instead of collapsing. I remember watching the tape one afternoon in 1907. Steel was acting strong, not erratic, but steady, confident. The kind of movement that tells you money is flowing in quietly. I took my first position and waited. Days passed, and the strength held. Volume swelled only on advances, never on dips. That's confirmation. That's the market whispering, "You're right, but stay patient." So I added, small, controlled, disciplined, and when the next wave came, my profits didn't just double, they compounded. That's pyramiding. It's not reckless scaling. It's the orderly expansion of a proven truth. Most traders build their pyramids upside down. They start big and shrink as they lose. I did the opposite. I started small and built only when the market paid me to. Think of a pyramid in Egypt, wide at the base, narrow at the top. That's the structure of lasting fortune. You never risk more on the second step than you did on the first. Each layer is smaller because your job isn't to get rich fast. It's to stay right long enough to let the trend do the work. That's what separates gamblers from professionals. The pyramid system isn't about ego, it's about control. It's about accepting that the market knows more than you and confirming your belief only when price validates it. That humility saved me. Every time I thought I was smarter than the market reminded me that it doesn't care about my opinion, only about my obedience. So I learned to obey it. And through obedience, I found freedom and fortune. In time, pyramiding became more than a tactic. It became a philosophy, a reflection of life itself. You don't leap to the top of success. You climb step by step, adding to your position only after each step holds your weight. That's how you survive on Wall Street. That's how you survive anywhere, because you can't build anything that lasts without structure, without patience, without proof. And if you learn to do that, not just in your trades, but in your thinking, you'll begin to see what I saw. You'll see the rhythm beneath the chaos. You'll see the order inside the noise. You'll see that profits, like pyramids, aren't built overnight. They're built right. The idea of pyramiding sounds simple. Add to your position as it moves in your favor. But execution is where most men fail. They think pyramiding means throwing more money into a winning trade just because they're up. That's not pyramiding. That's greed dressed up as strategy. Pyramiding, the way I practiced it, is an exact science built on logic and timing. It isn't about excitement. It's about confirmation. It's about adding only when the market has proven that your previous addition was correct. Most traders build pyramids with emotion. I built mine with mathematics and discipline. You see, when I take a position, my first trade is always small. The purpose of the first position isn't to make a fortune, it's to test the market. I treat that first trade as a scout. If the scout survives and brings back good news, then and only then do I send more troops. That's the foundation of my entire approach. If the market punishes that first move, if the price fails to act right, or volume dries up, or it doesn't follow through, I don't add. I get out, because the scout has told me the field is hostile. And when the field is hostile, you retreat. You don't double down on hope. But when the market rewards that first position, when it rises as expected, holds its gains, and shows strength on corrections, that's when the second layer goes on. Never before. The key is to build only in the direction of profit, never in the direction of loss. That's what makes pyramiding the opposite of averaging down. Averaging down is emotional. Pyramiding up is rational. One feeds the ego, the other feeds the account. When you pyramid properly, each new addition is smaller than the one before. Think of it as climbing steps that get narrower the higher you go. You're not increasing your risk exponentially, you're increasing your control. If my first purchase was 1,000 shares, my next might be 600, then 400, then 200. Each layer smaller, each layer added only after confirmation. By the time I've built the full pyramid, my average price is rising with the market, not against it. That's the difference between professional scaling and blind gambling. Now, the timing of these additions is everything. You never add during a reaction, only on resumption of strength. When a stock breaks out and runs, it will always pause. The crowd will sell, weak hands will take profit, the tape will hesitate. That's when amateurs add. They see a small dip and think it's a bargain. But that dip hasn't proven itself yet. It could be the start of the top, and I never add in weakness. I wait for the stock to prove that demand still outweighs supply. I wait for it to move to new ground again. That new high, that resumption of strength, that's my signal. That's when I add the next layer. You must remember, the market is a living thing. It tests your patience, your timing, and your discipline. When you pyramid, you're entering a partnership with momentum itself. You must let it lead. You follow, carefully, deliberately, one step at a time. Most traders can't do that because they need to feel active. They mistake movement for progress. They believe they must always be doing something. But the truth is, the best pyramids I ever built came from periods of stillness, from watching and waiting while the market did the heavy lifting. Now let me explain the part most never understand, the stop placement. When you pyramid, your original stop must rise with your position. Each new layer must have protection beneath it. That's how you lock in profit without giving it back. Let's say my first trade is at $50. I put my protective stop somewhere below that, perhaps $48, depending on the volatility. The stock rises to $55 and confirms strength. I add my second layer at $55 and my stop now moves to just below $50. That way, even if the market turns against me, I don't lose on the entire position. The worst that can happen is I give back part of my paper profit. By the time I add the third and fourth layers, my average price might be around $53, but the stock might be trading at $60. If the move collapses, I still walk away a winner. That's how you survive long enough to get rich. Every addition has two purposes, to build on success and to protect capital. If either one fails, the trade ends there. Never add to a position out of emotion. Add only because the market demanded it. That's what I mean when I say profits must pay for expansion. Your previous gain must finance your next risk. I never used borrowed money for my pyramids. I used my market's own gift. Each new layer was paid for by the profits from the one beneath it. That way, even if the whole structure fell, it never took me down with it. It took me years to learn that the market rewards men who build organically. When you force things, when you try to make a move happen before it's ready, you end up fighting the current. The pyramiding system works because it flows with the current. It respects the rhythm of accumulation, the tempo of demand and supply. Now, understand this truth. Pyramiding is not for the impatient. Most traders want instant confirmation, immediate results. They want the market to obey their timing. But the market has its own clock, and if you try to rush it, you'll only break what you're trying to build. So I learned to wait. I let my profits mature before I added weight to them. I allowed the trend to reveal its depth before I committed more. That patience was the foundation of every fortune I made. And when I ignored it, when I grew too eager to add, the market always punished me. Because pyramiding is like stacking bricks on a foundation. You can't add the second layer until the first has hardened. If you do, the whole structure wobbles and falls. Every trader wants to know the secret of big winners. They look for magical entry signals, fancy indicators, secret formulas. But the truth is simple. The secret isn't in when you buy. It's in how you build once you're right. That's what pyramiding is. The science of being right, slowly, carefully, deliberately. If I bought a stock at $50 and it went to $100, most would think I made my money on the first buy. But the truth is, my biggest profits always came from the later additions, from the layers I added when the market had already confirmed my direction. That's the paradox of the pyramid. You make the most when you're taking the least risk because your position is financed by success, not hope. And that's what separates the men who last in this business from the ones who burn bright and disappear. When you understand the mechanics, how to start small, when to add, where to protect, you gain control not only over your capital, but over your own impulses. But mechanics alone aren't enough, because the hardest part of pyramiding isn't knowing when to build, it's knowing when to stop. In the next part, I'll tell you the truth about that limit, the invisible line that every trader must learn to see, the one between confidence and greed, between expansion and ruin, between building a pyramid and being buried beneath one, because I crossed it, and it almost ended me. There comes a point in every great move where success begins to feel permanent. The profits flow, the tape sings your name, and your confidence starts to sound a lot like arrogance. That's the moment the market starts its quiet revenge. You see, it isn't hard to make money in the market. The hard part is to keep it. The hardest part is to know when enough is enough. I learned that lesson the hard way, more than once. After years of refining my pyramiding system, I believed I had mastered the rhythm of the market. I believed that as long as I followed my rules, nothing could touch me. But there's one rule no man can ever forget. The market is bigger than you. It doesn't matter how well your pyramid stands. One storm too many, and the sand shifts beneath it. When a trade works and every new layer adds profit, your greatest enemy becomes the illusion of control. You begin to believe you can't lose. You begin to think the trend owes you something. That's when traders stop following the system that made them rich. I did that once. I kept adding to a winning position long after the market had stopped confirming my judgment. The movement had slowed, the momentum was fading, but I told myself it was just a pause. I added anyway. I broke my own rule. When the reversal came, it didn't whisper, it roared. The same market that built my pyramid began to dismantle it, piece by piece. And because I had ignored my own signals, because I had grown too sure of myself, I watched profits that took months to build vanish in days. It wasn't the market that betrayed me, it was my lack of discipline. So I rebuilt. Not just my fortune, but my rules. I learned to treat every winning streak as a temporary guest, not a permanent resident. I learned that pyramiding is a privilege granted by the market, not a right to be demanded. The discipline to stop is just as important as the courage to start. When you pyramid properly, every addition must earn its place, but at some point the risk of adding becomes greater than the potential reward. That's the top of the pyramid. That's the point where the system says no more. Knowing where that point lies is what separates the disciplined trader from the doomed gambler. Here's how I learned to see it. The market moves in waves. Strong trends breathe, they surge and they rest. But when the rest becomes longer, when each new high fails to carry as far as the last, when the reactions grow deeper, that's the market telling you the move is aging. You don't need to predict the end, you just need to recognize the signs. When I pyramid, I watch not just the price, but the behavior of strength. If my last addition doesn't act right, if the volume shrinks, if the advance feels heavy, if the breakout fails to follow through, I stop. No hesitation. That's my signal that the market's generosity is closing. I never let a profitable pyramid turn into a monument of regret. The purpose of pyramiding isn't to conquer the market, it's to ride it for as long as it allows, then step off gracefully. Every great move in my career had a beginning, a middle, and an end. The middle is where the money is made. The end is where discipline is tested. And when that end comes, you don't argue, you don't hope, you don't pray. You take what the market gave you and step aside before it takes it back. That's the discipline that saved me. And I've seen men lose everything because they didn't know how to stop adding. Their pyramids grew taller, but their foundations never strengthened. They forgot that every addition increases not just profit, but risk. The market has a cruel sense of balance. It gives just enough to make you greedy, then takes it back to remind you who's in charge. That's why my final rule was simple. Build when confirmed, stop when questioned. If the market hesitates, I hesitate. If the move weakens, I stop adding. If my conviction feels too strong, I question it. Because in this business, overconfidence is the first step toward ruin. It took me years to understand that the true art of pyramiding isn't in the adding, it's in the restraint. A disciplined trader adds with the market, not against it. He stops not when he's tired, but when the market stops rewarding his judgment. Every time I obeyed that rule, I kept my fortune. Every time I disobeyed it, I lost it. The secret of pyramiding is the same as the secret of survival: control of risk, control of emotion, control of yourself. Because if you can control yourself, the market can never truly defeat you. And if you can't, no system will save you. So when you build your own pyramid, remember this: start small, build on proof, protect every layer, and know when to stop. Don't aim to be right all the time. Aim to be in control all the time. The market doesn't reward brilliance. It rewards consistency. It rewards discipline. That's what made me. That's what ruined me when I forgot it. And that's what I leave to you. Don't chase every opportunity. Don't fight every turn. Let your profits pay for your expansion, and let your patience protect your success. You'll find that pyramiding, when done right, isn't just a trading method. It's a way of living. You start small, you build on strength, and you stop when you've proven enough. That's how you stay in the game long enough to win. I built and lost fortunes in this business, but the lesson that stayed with me was simple. Never let success make you deaf to discipline. When you've built your pyramid and the market is still climbing, remember, it isn't your genius that's making you rich. It's your obedience to the rules. Break them, and even the strongest pyramid crumbles. Keep them, and you'll build something that lasts, not just profits, but wisdom. And that, my friend, is worth more than any fortune you'll ever make. If you've listened this far and you're serious about building discipline, not just dreams, start by practicing structure in your own trading. If you want a place to apply that discipline where rules matter and risk is controlled, check the link in the description. I've partnered with a firm that funds disciplined traders, the kind who build carefully and think long term. Remember, the pyramid starts with one brick. Start yours today.